All right, folks, here we go on YouTube Live. We are doing the YouTube Live thing again. Um, yeah, trade reviews on YouTube. What trade would you guys like to talk about? Anything you guys would like to talk about. We have a segment of trading data in distinct chunks. So the question is if you had, basically, if you had to segment the trading days into distinct chunks. Okay. How would you do it, and how would you describe trading each segment? Okay, first thing I would do is I would go with that first 30-minute print. Okay, so the first 30 minutes. Let's look at it like this. Let's look at trading like a busy highway, like Los Angeles. Um, in Los Angeles, you have a tremendous amount of traffic. Most of the traffic, generally speaking, you're going to get within the first couple hours of the day, and then the last couple hours of the day. We can call it rush hour. Trading the market is like rush hour. So you generally get an awful lot of volatility that first 30 minutes, sometimes that first hour. You see kind of crazy moves a lot of the time during that time. And then the last hour, sometimes the last 30 minutes, sometimes the last 15 minutes, you will see a lot of volatility. So a lot of movement, generally speaking. I'm the guy that likes to find setups whenever they are available, and a lot of times they come mid to late day. The thing I like about the mid to late day plays is the fact that we know what's already happened. You know, we can see we have historical context during not just what's happened in the days previous, but the first couple hours of the trading. So that's kind of how that's how I would describe it, though, is kind of rush hour, the first hour, maybe 2 hours, hour and a half, and then that last hour of the day, and then everything in between is kind of free and easy or free flowing traffic. Now, some folks, some traders out there, some high level traders only like to trade, the first 30 minutes and the last 30 minutes of the day, and that's, obviously there are plays the first 30 minutes and there are plays the last 30 minutes, but I like that free flow. I like that free flow of really good price action that happens kind of the mid to late part of the day. So that's kind of how I would describe it, if that makes sense. What's up, Frank? Good to see you. What is up, Jim? What's up, Chris? Good to see you guys. Hope you guys are doing well. And it's just I think for me, it comes down to a preference for me. What's up, Jim? Yeah, that's what's up, big dog. How's everything in Georgia today? In Georgia. Let's talk about some setups today, folks. Look at you, man. Let's talk about setups. Whatever you guys want to talk about from a setup standpoint, that is what we're going to talk about. Not much. Well, Jim, I'm glad you're here, my friend. Seriously, I'm glad you're here. We're going to get you some more good trades, my friend. Jason, what is happening? Good to see you. Who wants to talk about those setups, guys? Whatever you guys want to talk about. If not, I'll talk about, where I took trades. Where I took trades, first thing this morning, that first trade out of the gun. And again, I say this regularly, but it's not a downside. The reality is, because I call my trades out before I get in them, you guys see the winning trades and you guys see the losing trades, and it's all about don't lose interest, Jim. Don't lose interest. If you need to step away for a few days, step away, but don't lose interest. Please don't lose it. It's easy to lose interest when you're getting smashed. I get it. Find that spark, man. The spark is there. It's there. You just got to find it. Growing a $20, you can grow a $20 account. It's hard. Growing a $20 account is hard, but it's possible. It is absolutely, it does. It works. Yeah, you can find that $5 contract and turn it into $6, and then that $6 contract and turn it into $8. The more you step away, the more you lose interest, and I think that'll come to a point where you step away 43% on a foot. That's awesome. You'll get the itch again, Jim. You'll get the itch. You will get the itch. Talk about the first setup that I took today, folks. On the close, you know, I look back on it and go, you know what? I wish I would have got a close over VWAP, but I had a couple of green lights here. Had a couple of green lights coming out of pre. I had this zone, this 30-minute zone from pre-market. I thought we were going to push up. Took a loss on that. Came back. It pushed up here. I don't know specifically why I didn't take this trade right in here. I don't. Oh, I know why. I know why. I missed it. I was looking for a structure break of 623.40. So 623.40, we had a structure break, but I wasn't prepared to do it. And working big account. Good job, Chris. Good job. I was not prepared. I was doing something else right in here at 10:08 because we got a really good signal. Let's talk about the signal. We will talk about the specific signal on the trade that, quite frankly, I don't know. I don't remember what I was doing, but I missed it. The signal on this particular trade. Okay, somebody, if you guys look back to the 10:08 candle. What was the reason? What do you believe the reason for? In your opinion, what was the reason to put on that trade? What were the green lights? What were the reasons that, again, why you would put on that trade? Reason to put on that trade. On phone, point to a trend break and break of structure. Oh man, you guys are, that's it. That's it. That is it right there. So here it is right here on this candle right here. Jim, you nailed it. You nailed it. So Jason got the first. It's a double cross above P. It's a couple of things all at the same time, okay? So we're here on P. We're here right on P. It's a double, well, almost a double cross. We opened just inside the 9. So it's a double cross, and we broke structure at 40. That's the one we were looking for right there, 623.40. Jim, you nailed it. That's trading right there, my man. That's it right there. You got it, Jim. That's the setup right there. That's that double cross to the upside of right above a major level. That is it right there. That's it. It's a double cross to the upside for all intents and purposes. Yep, I know, Chris, I know. And it's right above P. What is the stop on this play? Well, you have multiple stops. You got the 20, you've got the 9, and ultimately you got this level at 20. So maximum loss on this particular play is about 24 cents. That's it. That's it right there, folks. 24 cents maximum loss. Now, if you swing it low a little bit, you can go down to 16. But if you reach 15, 16 back to the downside, you have to take yourself out. Anyway, there it is. There it is right there. And if you caught that trade, I mean, it was a really, 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 you can't see it. Oh, you can see it after the fact. Okay. I know, man. Being able to do it in real time, when you can only see this much right here, it's the if-then game. It has to be the if-then game. If this happens, then I'm going to put on a trade. If I get that double cross to the upside, if it is above a major level, and if it is breaking structure. Now, once we're in an uptrend, I'm not worried about structure, and I'll show that on the trade, that the next trade that I took, which was a really, really nice trade. But again, double cross to the upside above a major level, and it's breaking structure. Boom. There's your, you have multiple green lights. We have 1, 2, 3, 4 green lights, basically all at the same time. Green light right here. Oh, you were 1 candle early. Oh, nice. And again, you're above the 9, and you had that major level right here. So let's talk about the specific green lights on this candle right here at 10:08. So we had number 1, you're above P. There's a green light right there. Number 2, you're above the 9. There's a green light right there. Number 3, you're above the 20. There's a green light right there. And number 4, you broke structure. So you had 4 things that happened all at the same time. Those are green lights, guys. Put on that trade right there. And again, what's your stop? 24 cents. 24 cents can be a lot if you're trading a big position, but you work up to it. So it's not that kind of a big deal. But you have multiple stops directly below you. In other words, you have multiple levels of support directly below you. You got your 20, You got your 9. You have your major level right there. So that's it right there. And then where do you sell? Well, okay, you've got targets. What's your first target? VWAP. So you had VWAP and you had this pre-market level right here. It's a pre-market 30-minute double bottom right here at this level, 623.64. That's target number 1. Here's the really, really cool thing. Once you get above your target becomes support. Okay, so that's why we use 920, folks. It's support on the way up, it's resistance on the way down. So again, we are above, we're using it as support, waiting for the 9. Once we get that 9 up there, the 9 becomes support. So that's it right there. Then what do? Well, we go up to our next target. Guys, once we push above that target one time, it's proof that we can at least try to, that we've got a fighting chance to stay above this target. Now, if you sell out at this target, that's fine. That's absolutely fine. You got your target, you got in, you got out at your target, good trade, and then you wait for your next setup after that. So again, target right here. But if you push through the target and are able to use that as support, hang on to the trade. And again, that's not financial advice, folks. That's just a recommendation. That's just a recommendation. And when do you close it? Well, you got this really, really nice push, and then what happened right here at 1020? Volume. Volume, volume, volume. When you see a big candle come in, one of two different things is going to happen. It's either going to push back down to the downside, or it's going to continue going, right? It's every move is preceded by volume. I mean, it's just the way it is. Unless it's a super thin volume area where you don't need a whole lot of volume to push it through. When you get a move that doesn't have an awful lot of volume, be wary of it. Be wary for the stop. Be wary for that, that stop loss hunt, that stop loss raid. Okay, so let's say you close it on this candle right here. Totally understandable. You get that nice push to the upside. You got this seller's wick on top of the candle. All right, great. Let's say you hang on to the trade. Where do you close it out at that point? Well, you got the 9 that's pushing up. You can always trust, you trust the 9. That's what we do. We ride the 9, right? That's what we do. So again, you have support on the 9. So once you start breaching a couple of different things, then you're going to close out the trade. So where do you close it out? Well, you can close it out on this candle right here, but you're on support. You're sitting on support. You're below the 9, but you still have this support on the 2-day POC. Again, we're looking at multiple things, right? We're looking at the 9, we're looking at our major levels, and at the same time, we're looking at specific volume shelves if you use volume profile, and they are there. Now, when you start breaching multiple things, okay, and rather quickly, at that point, close out the trade. If you broke the 9 to the downside, if you broke your resistance or you broke your support, and you're breaking a level on volume profile, take yourself out of the trade. So again, you can take it out here on this big candle. You can take it out on the red one. This is where you're going to want to start absolutely taking yourself out of the trade. Why? Because it's breaking multiple areas, multiple levels of support. Number 1, it broke the 9. Number 2, it broke that 623.86. Number 3, you broke 1 minute support. So you had this 1 minute support that was established at 1016 and 1017. You got to close out the trade on this candle because remember, we broke structure to the upside. We're making a case to go to the upside at 1008. On this candle right here at 1023, we're doing the same thing. We're making the case because we're breaking structure back to the downside. So if you're breaking structure one way or another and you're on the other side of the trade, you probably better at least consider taking yourself out of the trade. Wouldn't you agree with that? It makes sense. If we're doing it one way, we need to play it the other way. This, yeah, and it's true. It's true. Listen, Atomic Habits is so good. Atomic Habits is so good, folks. All right, now let's talk about that next setup. What is the next setup? It's the one that I was in. It was a really, really nice trade back to the upside. Gave it a chance. Where do you want to start considering putting on the trade? I was looking at multiple things. You can use kind of that, this 40. I was looking at 40 and I was thinking, if we breach 40 to the upside, I'll get into the trade, but I wasn't really interested at that point because you could still make the case that it was still live to the downside. If you can make the case that the trade is potentially still live or still good, that you would still be in one side of the trade, whether you're in it or not. But if you can make that case, so in other words, if you can make the case for being in puts, whether you're in them or not, you're not going to put on calls. You just can't do it. I mean, you can, but I mean, just think about it kind of in your head. If I would still be in puts, whether I'm in them or not, don't go into calls. So it's kind of that same thing. Now, once we started, and this was, I think, 5 minutes into this trade when I got in. But what I was looking at, I knew I had a couple of major levels right in here. I had this pre-market zone. I had the VWAP. I had the 9. I had the 20 and the 2-day POC. Now, I got stopped earlier because the 2-day POC was at 624 even money, and it stopped right at 624 on my earlier trade. So I'm always aware of what, and it started out the day down here at like 624.14. So it started out way low, it started way down. But it pushed up early, it stopped by the 2-day POC. So I said, if we breach that 2-day POC and it's not too far into the trade, I'm taking the trade back to the upside. But there are multiple ways to play this. You can play it aggressively. Your best aggressive move is going to be 1029. In my opinion, that's probably the first place that you want to play take that trade. Again, that's my opinion. It doesn't mean it's right. It's just my opinion. At that point, you're 4 minutes in. But what you have is you have a green light because you're above that 30-minute zone and you're above VWAP. What you're below is we're below something we need to be above, which is the 20. Okay, so if we push above the 20 and then push above the 2-day POC all in one candle, you get into the trade because you have all that support and you've knocked out all that resistance. You can look left and go, well, I don't want to get in until I breach this, 24.14 back to the upside. I say, nope, I'm getting in way before that because I want runway. I want space behind me. I want kind of a buffer zone. Anyway. Now back to the upside, and again, I told everybody specifically and exactly before I got into this trade, exactly what I was looking for. What's up, code? And then I got in. Again, close of 10:30 right here. I said, guys, this is specifically what I'm looking for. If this happens, I'm getting in the trade. And leading up to it, again, I said, I'm getting ready to get in. And on the close of this candle right here at 10:30, on the close, I didn't wait 10 seconds to see if it was going to push up. I didn't wait 5 seconds to say, oh, it's printing green or anything like that. No, there's absolutely, positively no hesitation. Matter of fact, I probably got in a couple of seconds early. But you can't hesitate. When your edge presents itself, you're compelled to put on that trade. You have to do it. Whether it's a losing trade over here, what I took earlier, or it's a winning trade, it doesn't matter. You got to push the button if your edge is there. And again, it's hard. We have to do this in real time. Again, this is all we're seeing. We can't see the print. We've seen everything that's happened before, and we're using technical analysis because that's what we do. We use technical analysis to get in, so let's use technical analysis to get out of the trade. First target up, and it struggled right in here for a few minutes, 624.14. I had to breach that. Once we breached that, I had one more level. It was about 624.24, right up in here. Now, at this level earlier, let's see, I'm going to show you. I'm going to show you on the 5-minute at that level. You're going to love what you see at that level. This is at level 624, basically 21. You see up here at this level, if we were able to get through this level right here, there are very few positions that were being defended at this level. And I talked about this level. I said, guys, if we can get up here above 624.20, it's 21, 22, 23, right around in there, then we've got it's going to do one of two things. It's either going to push up hard with volume or it's going to come crashing down. So beware or be ready to close out your trade if it goes the other way. But this is what I was looking at, this level right here. So what we're doing we're using multiple things. We got the 9, we got the 20, we got major levels. We're using the volume profile all of those things right there to tell us to get into a trade, to tell us to stay into a trade, to tell us to get out of the trade. All of those things, we're drawing that picture in our mind, and it's just an if-then game. That's literally all that trading is, guys. It's if-then. Now, once we got through 24, right in here, I knew I had a target at pre-market high. Now look at what happened right here. Because we got into this thin volume. There's thin volume right here at 1040, and look what happened. It just, massive volume, one of the bigger candles, the second largest candle of the day. 350,000 shares were traded on this candle right here at 1040. It pushed up. Now, you can do one of two different things at this level. You can, because we got above that level, again, same thing. You can hold on to your trade and wait for the 9 because we have support here, or you can close it out on this big candle. There's no wrong answer to closing out the trade when you get a candle like that. None, none, none whatsoever. I gave it a few minutes, and man, I should have trusted my 20 or trusted this level down here, but I kind of thought we were going to push back to the downside, but it just kept on going up. It went up and up and up and up. With the only pullback, I was looking for this pullback and I went to lunch, so I missed the pullback right in here at about 12:23 market time. I missed that. That was the pullback that I was looking for. But it just went up, and it went up and up and up and up. And by this time, guys, this was the old all-time high, 626.28. I'm not going to put on a trade, and again, that's just me, right at all-time high without a bigger pullback. Again, that's just me, so I didn't have any other trades during the trading day. But I mean, there were some moves, guys. There were absolutely, positively some moves. But I mean, that's what we do. We use technical analysis to get in, technical analysis to get out, and we do it without hesitation, and we do it without fear. So anyway, that's my soliloquy for the night. Let me check for comments here real quick. All right, Amon. Hey, so Amon, I have to tell you, I was responding to you last night. He's on YouTube. I was responding to Amon last night. You asked a question, and I answered it part of the way through, but then I ran out of time because there's a specific time limit that they give you after the video is no longer live. So consequently, you probably didn't see my answer last night. So go ahead and ask that same thing again, and I will answer it. Or click on my name and send me a DM. That's better. Click on my name and send me a DM. Anyway, who else wants to talk about a trade, folks? What do you got? What do you got? So Chris. But Jim, does it make sense? Because you saw this, you analyzed this trade at 10:08. Does that make sense? I mean, you nailed it. It's double cross to the upside. You broke structure. Boom. You're above everything you need to be above, and go. I mean, that's it right there. The execution is the hard part. It really is. Seeing it, you get better. We get better. And again, who wants to talk about a trade? Any trades you guys want to talk about, and we will. And we have 10 people watching. So, hello, YouTube land. Hope you guys are doing well. Hope you guys are doing really well. So, yeah. Click on the link down below and pick up a free week in my trading Discord. Free week. And we do live daily trading every single day. We talk about all the different setups. It does make sense. Still need to execute in real time. And you do, Jim. You do need to execute in real time. It's hard. This is really, really hard. This is really, really hard. But you know what? It is so worth it. Once it starts making sense, I'm telling you, once it starts making sense, oh my goodness. It's world changing. It is life changing. You know, you wake up and you anticipate trading. You don't look at it like, I'm going to get my teeth kicked in again. You anticipate it and you look forward to it. And it's associated with good things, not just kind of those negative things. And you will look forward to it again, Jim. You will. Figured out, Jim, you will figure out how to execute it in real time, man. You will. You absolutely will. It takes time. It's not easy, man. It's not. It's not easy at all, but it is worth it. I'm telling you right now, man. It is so worth it. Yeah, I'm sure everybody in this group would agree that it is very, very worth it. Once you get to that point, you get to that point where you get better. It's not that it becomes easier. Well, it does become kind of easier, but you get better. You just get better. The market stays the same. You just get better. I know, but I'm telling you, it does get better, Jim. It absolutely does get better. Okay, who wants to talk about a trade? What do you got, folks? We're about 30 minutes in. Any trade you guys, or anything else you guys would like to talk about tonight? Yeah, so yeah. But Matt, does that make sense? You know, you talked about if I had to segment the trading day into distinct chunks, how would you do it? Did that make sense? Did that make sense? Okay, thank you very much. Thank you very much. And again, I think you'll notice I remembered to put the chart pick in today and record. So yeah, I'll put the chart pick in tomorrow, but no trade reviews on Friday nights. No trade reviews on Friday nights. Okay, who else has a trade that you guys want to talk about? Let's see. Okay, yeah. Oh, Sing. All right, Sing. Yes, Sing, send me a. Okay, so this is Sing. This is Aman. Okay. So yesterday, Singh was asking, he said, I was asking yesterday that if I enter at a major level, let's say in calls, but if it broke back under the 920 but still above that level, should I? Yes. Yes, yes, yes. The really cool thing about what we do is let's look at this specific trade at about 10:08. So look at this specific trade at 10:08. And again, I'm talking to Singh on YouTube right now. This is, for all intents and purposes, double cross to the upside right here at 10:08. You have, and your major level is directly below you, 623.20. That's kind of your last line of defense. You breach your 20 to the downside, you breach your 9 to the downside. You have your last line of defense. Now, it's really cool when you get one candle that breaches all three levels at the same time. Then you have a decision where you're stopping out if it goes against you. At that point, you'd probably use that single candle. So, yeah. Anyway, Sing, it's good to see you, my man. Good to see you. Good to see you. All right. Who else would like to talk about a trade tonight, folks? What do you got? What do you got? What do you got, Dan or Peter or Jim or Matt, Jason or Michael or Aman? What do you got there? What do you got, Sing? What do you got, Jeff? And Jeff, seriously, it's so good to see you. And I'm glad that you're sitting in your boat in your garage. That is just awesome. It is really awesome. I salute you. All right, anybody else want to talk about a trade? What you got, folks? What you got? I don't see anybody typing. Here, I'm going to do this. Can everybody see the chat box tonight? I updated my Discord earlier today, and now I can see the chat box again because I couldn't see it earlier. So here it is. If you guys can't see the chat box, there it is. There it is. There it is. I'm just guessing that everybody's kind of done. You know, it's been a 4-day work week so far, and I don't know if anybody else wants to talk about talk about any other trades. Talk about any other trades. So, yeah. Okay, so that being said, folks, I'm going to get with YouTube real quick. You guys know, thanks for being here. And again, we have 10 watching right now. Thanks for being here, guys. I appreciate you very, very much. Well, you guys know the thing. If you like our videos, please go ahead and like, subscribe, and leave us a comment. We always appreciate those comments. Share, all that kind of good stuff. And if you're interested in live daily trading, head on over to our live trading Discord. The link for that is down below. We are so convinced that you will find value in what we do. We're going to give you that first week for free, absolutely no cost to you. Thank you, Sing. Seriously, my friend, seriously. Hope you're doing well. And again, folks, it's the link for that is down below. It's called, what do you think it's called? It's called 920 Trading. So anyway, I hope everybody in YouTube land has a wonderful, great afternoon, evening, and all that kind of good thing. Kind of good thing. All the good stuff. All the good stuff. Anyway, thanks for being here, folks, in YouTube land. And you guys know the rest. I will see you in